And the reaction we got from some really big companies is, I don't believe in a million years you can build this thing. When we look at the tax market, one of the things that was just truly confounding to us is taxes everywhere. We built the whole business on AI. You have a tax refund market that's $300 billion a year. We said, okay, there's 14 million words in the federal tax law. We've got 50 states we need to cover. Basically, April is in the business of taking that pretty boring, arcane text and converting it into computer code. At the time, no one called it this, but it was kind of a co-pilot for tax. And so we built that. We've 20x'd our coding velocity relative to the industry standard. And so that's how we were able to do this with a fraction of the time, money, and resources. And tax is just so fundamentally very sticky. If someone's coming back and doing their taxes with you every year, that customer is not going to churn. But when we started the company, basically people told us, hey, you're out of your mind.
Hello everyone, NICO here, the co-founder and CEO of Claire, and also one of the hosts of HR Tech Trailblazers. Today I'm super excited to have Ben from April here with us. Ben started April a few years ago to embed consumer tax payments into both HR tech solutions as well as consumer fintech products. I'm really excited to have Ben here today because tax payments for consumers is a new space that's being adopted by multiple different platforms, and Ben has really trailblazed in this category. Ben, welcome to HR Tech Trailblazers.
Thanks for having me, Nico.
All right, well, Ben, maybe let's start with a very simple question. Why did you found April? Yeah,
it's a great question. I think most startup founders start something because they can't not do it, and I think that's very much the story behind April. When we started the company, basically people told us, hey, you're out of your mind. And I've spent my career in FinTech. I previously led a group at Deloitte Consulting, and then have been in early stage venture, built a couple of companies, one bought by PayPal and another one by Moody's. And was really looking back in 2020 at sort of how I wanted to spend the next decade. And so one decision was I wanted to spend it on being a founder and building. And the other is I wanted to be involved in a paradigm shift. And I think April's at the intersection of a couple of really important paradigm shifts. One is embedded. And so when we look at the tax market, one of the things that was just truly confounding to us is taxes everywhere. It's every time we transact, you get paid. You're going to make a payment, tax is there, except we siloed it, right? It's the famous saying, we don't give tax advice, go talk to somebody else. Who is that somebody else? It turned out that there really isn't somebody else. And so what we realized is we need to embed tax insights in a tax engine alongside your payments, alongside your banking, your investing, and there's a huge opportunity to bring that technology inside. And the second question we asked ourselves is, why hasn't this been done before? And what we saw was an industry, a tax industry that basically has a few providers that were built in the early years of the internet. Some even predated the internet and haven't been updated in a long time. And that's because the tax code continues to grow every year. We call it the Moore's law of taxes, right? So every couple of years it doubles. And part of that is because there's just more edge cases, there's more new and innovative parts of the economy like green energy or crypto, and so the law has to adapt. And so we looked and said there's an amazing paradigm shift coming with artificial intelligence, and maybe this is a new opportunity to take a technology that has been built before even the cloud era and bring it into modern times. And so for us, that was sort of an amazing opportunity to take something that had traditionally been siloed and really retrospective and bring it inside and embed it and leverage AI and other new frontier technologies to be able to make it happen.
Amazing. And on this journey, where has the initial success and maybe kind of the major success that you and April have seen?
Well, first of all, before we started the company in 2020, we did a lot of customer inquiries, basically trying to talk to people, hey, if we built this thing and your customers could file their taxes, they could get tax insights all inside of your platform. It would be API driven, you could white label it, like, would you buy it? And the reaction we got from some really big companies is, absolutely, I'd buy it, but I don't believe in a million years you can build this thing. And so this year, we're happy to share that we're the first company in 15 years to have completed a tax engine in all 50 jurisdictions. It's a major accomplishment. And that means that we have a tax engine that's robust, that's been reviewed by federal and state authorities that actually is accurate and correct. And we did it in a way that was embedded first, that was API first, and that dealt with the requirements and the needs of what it would be like to be inside of major technology platforms like a Gusto or a Chime that have incredibly high demands. And so being able to bring that to market over the last 3.5 years and now seeing the demand that we have, across the industry, is for us what it's all about at the end of the day.
Let's maybe focus on one customer, Chime. What was the use case, and what are you building with them?
Yeah, so it's funny. The day that I decided to jump into the company was the day that the TurboTax acquisition of Credit Karma closed, because Credit Karma really pioneered this concept. We didn't entirely think of it. I mean, we've I think thought of a lot of things, but they did think of combining tax and credit, and it was a real inspiration for what we decided to build at April. And the second interesting thing that happened is, as Credit Karma was being acquired by Intuit, the Justice Department forced a sale of their tax business. And so that got bought by Cash App. And we said, oh, that's interesting. You have one of the fastest growing consumer technology platforms in the world. And they just bought a tax business. That makes a lot of sense. And this was all happening as we were kind of ideating April. And so we sort of reverse engineered that and said, what was it about this business that Cash App thought was interesting? Why did they bother to acquire it? By the way, the person that built that business now runs tax at April, and has been doing an amazing job for us. And so we saw that, and so we started approaching some of the digital banks saying, hey, there's an amazing opportunity. Your competitors are already doing this, so if you want to stay current, you have to do this. Second of all, you have a tax refund market that's $300 billion a year. A lot of these businesses make their money on interchange and payments, as you know, so having that money flow through in tax season, some of them describe it as their Super Bowl, right, where they see a massive inflow of funds. And then third, and this is something that I talk a lot about, I think today we're at a day and age where it's really hard to differentiate on products and services in consumer finance. If you can build something, odds are somebody else can as well, and the market is so connected now and everything is so public that it's hard to kind of keep that moat for very long. And tax is just so fundamentally very sticky. If someone's coming back and doing their taxes with you every year, that customer is not going to churn. And they're going to be doing more activities with you, and you're going to learn more about them. And you're going to have a huge opportunity to expand lifetime value and be able to create a deeper relationship. And those are sort of the three things that we look at, especially when we look at the digital banking space.
You take a company, I can use Chime, but we can also use Gusto or any of the others that you've mentioned, that this is not their core business model. How do you go to market? Who do you talk to? Do you talk to the head of finance? Do you talk to other C-suite members? Do you talk to product managers? Do you talk to people in partnerships? Like, how do you go to market?
That's a great question. And for us, we had to, and this is something we were talking about before, you're inventing this for the first time, right? There's decades of tax platforms that were out there, and they were either sold direct to consumer or they were sold to tax professionals. There is no one that really sold tax software to finance platforms. It didn't really exist. And so for us, there was a lot of questions of, are we a direct-to-consumer company that has a channel strategy? Are we a B2B company that has a consumer-facing component? I think in the end, we decided we're much more the latter. We see ourselves really as the partner to the enterprise. Our client is the FinTech partner, and we're subject to things like SLAs and the way that we service them and the needs that they have, which is different than if we were truly a direct-to-consumer company and we were just out there in the market with a website and a mobile app, and we're just solely focused on the taxpayer. We do obviously need to take the taxpayer extremely seriously, and so in some ways we almost have two customers and two sales cycles, which you could argue is even more complicated, right? Because we have to start by selling to someone, maybe it's a GM or a business line leader or a product manager or someone in business development. We have to create a business case with them that makes sense, and it's not their core business, to your point, right? We don't want to necessarily turn tax into a business. We want to help them accrue value to their digital platform. And so that takes some time to be able to underwrite that and understand the different mechanics of that. And then we have to work with them to assemble a team and a program to say, hey, this isn't your core business, but you kind of have to treat it like it is. Because if you don't, and you just put up a link somewhere like this, you're not going to really get a lot of value out of it. Right. And so that conversation's a little bit, it takes some time to get used to. They're like, well, this isn't something we're a payments company or we're a lending company. We don't really know about tax. And so our customers often rely on us for that expertise and to help them stand up a program that can be enduring and grow year over year.
If you could talk to your ideal customer, what would you advise them to do to be successful in building, like, on top of you, meaning building a tax solution for the customers, but it's like embedded with April powering it?
I think what's so interesting about tax is that the way that a finance platform adopts the program is going to change completely on what their business goals are and the type of underlying business that they have. So if you're a banking platform or a payments platform that's primarily monetizing by funds flowing through the system. Everything you do is going to be around getting the refund, pushing the user to deposit the refund in you, maybe making a loan against it, and pushing those funds so that there's transaction and that you're monetizing. Whereas if you're in the payroll space or you're in the wealth space, those conversations are going to look very different. It might be more about monetizing on the actual value of the return, or it might be something that you're actually willing to give away for free because it provides so much value in the context of your overall business proposition. And so I think that's the part I enjoy. I'm an ex-consultant, and so I think for us what's been a lot of fun is to actually work with our different verticals. And they do look similar, right? You have lookalike partners and best practices, but the way that we stand up vertical by vertical is going to look a little bit different depending on that exact business dynamic that they're optimizing for.
What is a scenario when you would meet a potential customer and you off the bat tell them, look, I don't think you're ready for this? Under what scenario would you advise them, hey, let's wait it out? I'm sure you have encountered moments like that. Maybe they're interested, but you're like coming back to them and you're like, hey, I think in your customer journey, this might be a little too early or,
Yeah, there are different reasons. I think what we found is that generally you need to have a really strong core business, and that business has to be working to be able to really find value from this. And I think where we've seen that not work so well is where you have maybe a startup company or someone who's trying to figure out their core business and then wants us to be part of it. That can often be a struggle and something that we'll traditionally say, okay, come back in a couple quarters once you have these things ironed out. We also find that there are some segments or characteristics that sometimes could make a provider in some circumstances less of a fit. So we see that there are some areas where tax is just not so natural. So if you're offering payday loans or certain other types of lending products, maybe like a HELOC or a mortgage where you have a very kind of defined interaction with the customer, this may not make a lot of sense to offer alongside it. Doesn't mean you can't, but the thinking would need to be a little bit different. We tend to do well where there's an ongoing and repeat interaction that happens with the customer. And the second is going to be maybe going to depend a little bit on the interaction that the platform has. So for example, the more digital you are, the easier this is going to be to embed, the easier it's going to be to switch behavior. If you have no digital interface with your customer whatsoever at all, and you have no human contact with them either, it's going to be kind of hard to offer this. You're going to send them a link in an email, and adoption's probably not going to be great. And so we tend to try to focus on finance platforms that have an ongoing and direct interaction, are digital first, and where tax has some kind of clear correlation to the core offering that they have.
Makes sense. Let's talk a little bit about one of your marquee customers, Gusto. They are, from knowing them, they're very proud to have partnered with you. I think you've added a lot of value to them. What do you think made them successful?
Well, there's a few things that make them successful. Some of them are structural, right? So from the beginning, Gusto, has been an innovator in the space. They're a digital-first payroll company. They have a mobile app. They have a banking app. And so they're already quite far ahead of the game compared to a lot of other HR companies as far as engaging that end employee. So they've done a really great job there. And the second is they took a really innovative approach with us as far as co-building together. So our Paycheck Optimizer, which is basically the ability to have year-round products and actually leverage year-to-date pay to tell a customer what they're probably going to owe end of year and actually adjust their tax withholding, is something that we co-built with them. So it was a very intimate partnership that happened over a couple of quarters. And then they really, I think, followed our advice and leaned in as far as the core integration. And so that you'll see if you look at the integration that it's not just embedded within the Gusto app, but there's a lot of exchange of data happening. And so they actually had the lowest time to file, I think, out of any April partner last year because they were pre-filling so much of the tax return. They were about 30% faster than the next partner, and that's a big credit to them and the investment that they made in helping their employees on the platform save money and time filing their taxes.
Talk to me a little bit about how do you think AI will impact your business model?
We built the whole business on AI. So if you go back to what I said earlier about people thought this couldn't be done. And we said, okay, there's 14 million words in the federal tax law. We've got 50 states we need to cover. It becomes a gargantuan problem. We've raised publicly about $40 million to date, about 50 employees. It's not nothing, but that's shy of the few $100 million probably we would have needed to do it the old way. And so we said, okay, we've got to get national in 2 years. How are we going to do it? And I partnered with this great individual Daniel, who had been the CTO of Waze and a leader within Google Israel. And I said to him, hey, I think there's a huge opportunity. At this time, people weren't really talking about AI. It was still sort of advanced NLP and data science. But I said, look, the tax law is congressional law, right? State legislators, federal legislatures, they come out with the body of really boring text. And that describes basically how you're going to be taxed. It's not quite deterministic, but it's pretty deterministic. And basically, April is in the business of taking that pretty boring, arcane text and converting it into computer code like Python that you have an executable. And I said, well, all these pieces of law are not exactly the same, but there's characteristics that are pretty similar. Maybe we can build a process and train this process to accelerate our coding, basically like an auto. At the time, no one called it this, but it was kind of a co-pilot for tax. And so we built that. We've 20x'd our coding velocity relative to the industry standard.
Wow.
And so that's how we were able to do this with a fraction of the time, money, and resources. That said, we have very robust testing processes. Everything is reviewed by a human, and we're also using AI now to also help with the testing as well. So it's kind of like a core, I would say we are like a core AI company. That said, like a lot of our apps, the users are still answering questions, in a regular question format. And what we try to say is we obfuscate the complexity for the customer at the end of the day.
Shifting gears a little bit, you clearly have, cemented, I think, your go-to-market and your strategy around this embedded journey. We're both embedded product providers. A question I get a lot is why not build your own app?
It's a great question. We get it all the time, primarily from prospective investors or people that are out there in the market. And I think there's a few different reasons. Number one, as I said, we're a B2B driven organization. And so I think first and foremost, we don't want to compete with our customers. And so our full attention is on the clients that we serve. We're very selective about the clients that we'll take on. And we never want to have a situation where there's kind of this competing priority. And I think that that's sort of one thing that allows us to be true to our brand promise. If, for example, someone were to say, hey, maybe I'll partner with Intuit. A, I don't think they have most of the embedded capabilities that we have. But B, I'd say, well, are you really going to be intimate with these people? They're out there not just competing for tax, but they're competing for deposits and all other sorts of financial products. So I think by being Switzerland or being neutral in this case, it really helps with the sales motion and the brand and the go-to-market reputation that we have. The second thing is mechanically, these are two very different businesses to build, right? Building a B2B company where you have, SLAs on latency and you have customer support and you have, all sorts of things you need to do to help your customer be successful. That's an obsession that's very different than trying to be obsessed with building a B2C brand and B2C, or D2C user acquisition, right? And so I think being excellent at anything is really hard if possible at all. And so I think our mantra is like, we're already doing a lot, and let's be world-class at what we do and not sort of boil the ocean. So I'd say those are the two primary drivers. I'd say the third one is a little bit more philosophical, where I think we just don't believe in it. I think we believe that customers are already well served today, and the whole point is that tax needs to be embedded. And so by just creating yet another siloed app to do what we'd want to do, we'd have to go become our own super app.
Right.
And that just, when you play it out, you're like, this just doesn't really make a whole lot of sense. We want to be the picks and shovels people to the super apps, not competing with them in that business.
That makes sense. Do you see yourself as the pioneers of the embedded tax category?
Yeah, I think we were, I think there's anyway only a couple of providers. I think tax hasn't been a popular space to build in. There are other people at the periphery doing, different kinds of things, and you also have sales tax and some other adjacent areas, but it's a really tough space to build in. I think we were early-ish in the embedded model. It depends where was Plaid the quote first embedded provider? I don't know. I think there's, it depends, how you sort of look at it. But I think for us, not only were we early or the first, but I think we've also differentiated in the coverage we've taken and also the product suite that we have. And so we do a lot more than just tax preparation. We also have a suite of year-round capabilities that allow customers and their finance platforms to help them track their taxes, to help them optimize their taxes, to help them understand their liability, understand the impact of a stock sale. And so for us, it's really about being a platform of capabilities that can be a holistic offering.
That makes sense. Let's say you're talking to a new potential platform and they realize that this could be a good addition to their platform for their end customers or the customers of other customers, depending on how far it is. And they ask you, so how do you price? Like, what's the upside for me? Like, is there any upside? Like, how would you answer that question?
Yeah, well, I would say there needs to be upside, clearly, because otherwise, otherwise, why would they do it, right? People are here to make a living and run a business, so there needs to be upside. Now, how that upside is calculated, I think varies a little bit, right? When you look at the refund business, so you can look at interchange and look at the amount that we charge and look at the amount, that we would sell wholesale and then help the customer build a business case. If we're selling the product and someone's going to mark it up, that's a different conversation. But oftentimes, a lot of our clients are really in this business to just serve their customer properly, increase lifetime value, reduce churn, make them very sticky. And you still have to assign a value to that, but it's a little bit different because then you're actually looking at your CAC, you're looking at your retention spend, you're looking at the overall lifetime value spend and trying to approximate how you think you can bend that curve by offering this. And so that's where we try to push our clients because we think that's really where the biggest value is. And we try to move out of this conversation of sort of this very, let's call limited business case. Some cases do get underwritten, that way, and it's easier, I think, for folks to wrap their head around. But as we've worked, with customers now for second, third, and fourth year, it's pretty clear that that's where the puck is skating.
One thing we talked about is AI. Do you have concrete examples of how you or the team have been impacted by advancements in AI over the past few years?
Yeah, so on the back end, we've been able to accelerate the coding and the amount of tax coverage we've been able to bring online by 20x. And we started and we got to a 2x and we got to a 10x and now it's 20. So what that means is that we can serve more customers and we can serve them faster and at a reduced cost. And that's been a huge part of our story and how we've become the first national provider in 15 years. Now, customers don't necessarily see that when they're in the app. They see a nice, digital application that lets them file very efficiently. And so we use AI actually in two places that the customer would see. One is we use it in the chatbot. We were very early to adopt this, and we are now answering, I would say, more than 50% of all contacts through support. We write our own content, so we're not sort of sourcing it to the internet, but allowing the AI to interpret the question and serve up the shortest possible answer has saved us a lot of time and driven a high NPS within our product. We're at about 60, which is considered quite high in the tax space. The second is the way that our customers traverse the tax organizer. So there are hundreds of possible questions that someone could answer when filling out their taxes, and we've been able to reduce that down to like 25 minutes and sub 50 questions for the average customer while getting them their maximum refund. And so for us, we're constantly recalculating the types of questions that the customer might need to answer based on the information that they're providing. And so there's a lot of AI embedded in April and in our clients' applications, but it's not necessarily like, hey, this is AI, you enter this thing here, this AI is going to save you time or something. And I think the analogy I like to use is I was early in the tech scene here in New York when cloud and mobile were blowing up. And I think in the end, there weren't really good cloud businesses or mobile businesses like that didn't, I think, really pan out. Like, we have a cloud-based CRM. Okay, like what functionality do you have? What capabilities do you have? Can you do it? Can you ship faster? Are you better? Are you cheaper? And so for us, I think it's all about providing the best, fastest, cheapest service to our customers and their clients.
All right, last question, Ben. You're the forefront of your industry. Where do you think embedded FinTech is going to be in a few years?
I think we're just getting started. What we're seeing now is that we're embedded inside of, trillion-dollar asset manager, large payroll companies, largest digital banks, like really significant companies. And what's interesting now is that there are other embedded providers. So like, for example, we use Atomic for payroll switching. And now, we're building things with them inside of our application. You have other examples, whether it's like within OCR or AI that we just spoke about, where you have like embedded in an app. So I think the future that we imagine is that there's going to be different hubs and spokes where you have these massive venues, whether it's the Chimes of the world or the Chases of the world or the Walmarts of the world, where there's just a huge customer centricity and aggregation happening. And then you're going to have all different types of capabilities nested within it. And that's going to be more efficient. It doesn't make sense to have everybody reacquire customers, and it also doesn't make sense from a customer standpoint to be served in 20 different places. The customer will be best served when they can get more things in one place. And so we're incredibly bullish, obviously on the embedded approach that we have, but embedded as a category on a whole.
Awesome. Ben, thank you so much for being here.
Thanks for having me.